Hello everyone, welcome to our channel. We provide simple, clear, and actionable US stock trading insights for everyday investors. Want faster and more precise trade ideas? Visit usaxp.com and register for free. Get automated 1 to 4 week trading analysis, complete strategies with entry, stop loss, and take profit levels, and coverage across US, Hong Kong, and global markets. Netflix just dropped nearly 10% in a single day. Now the big question is simple. Is this a buying opportunity or the start of a bigger crash? Let's break it down. Shares of Netflix fell sharply after two major updates. First, the company gave disappointing Q2 guidance. That raised concerns about slowing growth. Second, co-founder Reed Hastings announced he is leaving the board. At the same time, the overall market was actually up. That means Netflix clearly underperformed. That's not a great sign in the short term. Now let's look at the technical picture. Netflix is currently trading around $97. It is slightly below the 20-day moving average, but still above the 50-day moving average. This puts the stock in a neutral zone. Momentum indicators are mixed. The RSI is around 48. That's neither overbought nor oversold. The MACD is slightly positive, but the strength is weak. Here's the important part. Trading volume suddenly jumped to almost 3 times the average. That tells us something big is happening. This could be institutional selling, and that increases short-term uncertainty. So how do we trade this? There are two main strategies. The first is buying the dip. The key zone is between $93 and $95. This area sits near support, and it offers a better risk-to-reward setup. For example, if you enter around 94, your stop loss could be around 88.7. That's about 5 to 6% risk. On the upside, the first target is around 106. The second target is around 108 to 109. That gives you a potential upside of more than 10%. The second strategy is the breakout play. Instead of guessing the bottom, you wait for confirmation. Watch the 103 to 105 zone. If the price moves above this level, it signals momentum is coming back. For example, an entry at 104 with a stop around 100.5. That's a smaller risk, around 3 to 4%, but the upside is also smaller. Now let's talk about key levels. If Netflix drops below 91, the trend becomes weak. If it breaks below 90.69, that could signal a full breakdown. On the upside, a move above 103 would be a strong bullish signal. Now, the risks. The biggest one is the heavy selling volume. That could mean large investors are exiting. Second, weaker guidance suggests slower growth ahead. Volatility is high. That means you could get stopped out quickly if your position size is too large. So what's the final verdict? Right now, the stock is neutral with a slight bullish potential. This is not a clear trend. It's a reaction-driven market, and the next move depends on price behavior over the next few days. Here's the simple plan. Buy the dip near 93 to 95 if you want a more aggressive entry. Wait for a breakout above 103 if you want confirmation. And always control your risk. So what do you think? Are you buying Netflix here or staying on the sidelines? If you want more analysis like this, covering AI stocks, high growth opportunities, and real trading setups, make sure to subscribe. And I'll see you in the next video.